All righty, everyone. It is Friday. I am grateful for that. This is Trading a Smaller Account, and today we are going to do some things that we love to do, and that we're going to place some new trades. We're also going to do some things that sometimes we don't like to do as human beings, which is look at trades that aren't going swimmingly, or that have hit stops rather than targets. And Lisa made a comment in the chat before the class even started and said, I look forward to the day that I can trade unemotionally like Barb. Spoiler alert, I'm a human being just like everyone else. And I was doing the gallows walk this morning, looking at those trades that weren't going well. And so I can appreciate how sometimes the temptation is to put your hand on the top of your laptop and perhaps close it rather than making sometimes hard decisions. But if you want to be a successful trader, we have to know that there are times when not everything goes right. So we're going to look at a couple of those and then walk through the conversation that a trader might have in their head about how to manage that. And then we're going to place some new trades, both bullish and bearish, because the market is having a day, and that gives us an opportunity to take advantage of different things that the market might be presenting to us, right? Right. So if you are not officially following Ben and I on X, I invite you to do so. Ben Watson is here with us in the chat. If you've never met Ben, he is an absolute riot to be around. So he's a friend and a fellow coach, knows a ton about the markets. If you haven't checked out his trading index options class, you are missing out, my friends. Put that on your schedule. It is Wednesday afternoons, I believe. Correct me if I'm wrong there, Ben. But follow Ben and I in the Land of X, Barb Armstrong CS and Ben Watson CS. We're posting lots of great content, and it's a way of us being able to communicate with you outside of webcasts like this. So just before we get into the thick of things today, we do a lot of options trading in this class. Know that options carry a high level of risk and aren't suitable for all investors. Okay, hold on. Just hold on 1 second here. Let me move this over here. Are you seeing just put my, okay. Hold on. Just have a little technical hiccup here. Oh, okay. Stop sharing. Yep. Okay. Okay, so here we go. I'm on mute now, right? Okay. Nope. Okay. Okay. Okay, sorry guys, we had a little technical hiccup there, but you should be able to see this page now and know that options carry a high level of risk. Know that the Paper Money software application is the desktop platform is what we use here. And so it is a great place to become familiar with your trading strategies and to make sure you understand what you're doing before you consider trading in your live account. Yeah, Josh is saying that he's loving this. Yeah. Well, you know what? Like some days serve you lemons, and today we're just making lemonade. Okay, so we're going to do a quick look at the markets. We're going to place some new example trades. We're going to manage some of the trades that we've already got going on in our portfolio. And, the reason I think Josh is loving this is because, Josh and I have had the chance to meet. I've met many of you at these live in-person events. The next one, I'm getting on a plane on Thursday for this market drive in Anaheim on Saturday. We'll have the coffee on, we'll provide breakfast and lunch and a really great reception at the end of the day. So we'll feed you both mind and body, and we'll kind of look at the markets from what's going on globally, how are tariffs and the government shutdown, how did they impact things, right down to looking at individual stocks. So It's not too late to join us. So if you're in the Anaheim area or you'd like to go to Anaheim, you can join Ben and I there this coming Saturday. And then December 11th and 12th, we'll both be in Houston for a 2-day workshop. And that will be first day technical analysis, second day intro to options. So that's a great event. And Miami, I thought no one would show up the weekend before Christmas, but what did I know? We did one in Miami last year at that time. And I mean, people were sitting in the aisles practically. So we're doing an advanced options event the 19th and 20th. So yeah, I'll be there along with Ben and a cast of other, of others. So would love to have you join us. Yeah, so I'll be at all of those. In the first quarter, I'll be at many events as well. But we can talk about that when we get to January. Okay, so if you want to see these live events, so if you go to schwab.com/coaching and then come down here to in-person events. So, and you just click here to learn more. You'll see where it's being held. These are all free to attend, by the way. They certainly aren't free for us to put them on, but they're free for you to attend. And then come January, we're kicking off in Dallas. I will not be at that one, but Kevin Horner will, along with Ben and a group of others. And then end of January, Seattle area, then Sacramento, etc. Okay, so if you've never been to a live event, it's how I got introduced to the world of trading back in 2011. But yeah. Yeah, I think they're fantastic. And Ben is on stage and does just a remarkable job each and every time. Okay, so let's come out to the market and have a look at what's going on. So, when I said I was doing the gallows walk, at kind of looking at, what's been going on, because we started on Monday at almost 34.5. We started the year at 25,000 and we're down to 32.6. So we're down almost $2,000 in this account this week. And, that's not a fatal blow, but it is a flesh wound. It still hurts. Yeah, it still hurts. So we're going to look at Micron, spoiler alert, perhaps in a minute here. The S&P 500 was down initially this morning. So you can see it gapped down on the open. And it has rallied since and is now up about, 0.4%. The NASDAQ also opened down on the day and is now rallying. But, when it opens down like that, it makes us nervous, doesn't it? Yeah. And then when we look at the Dow 30, this index is a little different in that it's based on the price of the stock as opposed to the market cap of the company it represents. But, it hit a new all-time high back here on Wednesday, big down day yesterday. And it's come down to, a former resistance level, kind of former support level. These are not finite numbers, they're ranges. And we've got this big hammer candle happening at a resistance level or a support level, which is encouraging, some might say. So things are looking definitely cheerier than they were when the market first opened. And again, gap down on the open and is rallying. But this has come all the way back down to the 100-day moving average, which, it hasn't really been in the neighborhood of since June. This 30-day or probably 50-day moving average, this red line is a 30, has been actually holding as support until this past week. And then it looked like it broke support and hit this and has become a resistance level. So will this continue to be a resistance level? Well, stay tuned. Yeah, so Ben has an expression. And, his expression is, spend the nickel and avoid the pickle. And it's about closing out, credit spread trades, for example, like buy them back when you've got 80 or 90% of your max gain and avoid having that trade turn around and go from being a decent profit to perhaps a max loss. And have I seen that happen? Yes, I have had that unfortunate privilege. Okay, so let's look at our VIX. And the expectation, right, is that the VIX probably opened higher today and is now coming lower. And that's exactly what's happening because this tends to move inversely to those major indices. Okay. Yeah. Okay, so let's come to the monitor tab, and we had one stock hit, and you don't always know until you look at the chart. It's like, ooh, was this a win or a loss? So if we come and we look at the chart, here is CLAC, and it was uptrending. We bought on the 3rd of November. We bought some shares of stock right around here, and we put a target in, and then we put in a stop. And our stop was at 1148, probably 2% below a recent low. Okay, so how did that work out? Well, if we come to our account statement and we type in CLAC, we can see we bought the shares for $12.20. And then if we look at our order, our target was to get out if it went up $137 to $13.59, or if it came down and hit 1148, it would trigger a stop market order. Well, what did CLAC do this morning? It did what all the major indices did. It gapped down on the open and has since rallied. So we didn't get out at 1148. And this is, we talk about this a lot, that, just because we put a stop loss order in, it doesn't guarantee that we're going to get out at the price we requested. And this is an example of that. And then, what really frosts your petunias is then the darn thing rallies. And, we wouldn't have been stopped out at all. And instead, how did things play out? Well, just one sec. We bought it for $12.20. We got out for $11.34. I've already done the math here. So we were down $86.42 a share times 4 shares. Now, there were no transaction fees because this was a stock purchase, but we were down $345.68 on that. So, was this a successful trade? I say yes. And why is that? Like, why is this crazy lady drawing a smiley face? Well, because how much did we lose? We lost $345. And yes, it's a flesh wound. But is it greater than 500? No, our max risk per trade is between 500 and 600. And so this, this amount was less than that. And so we followed our rules and we put a stop in at the first place. And so check there. This just happened to be a trade that didn't work out. And we planned for that. We planned for that by putting stops in, and so although this one didn't make money for us, we followed our rules. And then if you come and look at the chart, you can see here, our stop was at 1148. If you hover over the candle, it opened at 1135.54. So we got out lower than our stop, but it's now trading at 1168, $20 above our stop. So petunia's frosted, but we're going to move on. Okay. Okay. Now the other thing, and so I came down here to look at our short put verticals, and we have 3 out of 5 positions are in the red, which means they're losing money. So Microsoft is up 44%. We don't have to do anything with that. Apple up. Amazon was down more, but Okay. Sorry, apparently I went on a short verbal vacation. Okay. So the gremlins continue. So let's look at Amazon and Tesla. And why are we even going to look? Do we just want to rub salt in the wound? And somebody's saying, do you have a rule for when you might revisit a losing trade? Yeah, daily. Yeah. We're going to look at these trades, these short-term trades pretty much daily. So with this Amazon, and if we come back and if you didn't put it on your chart and we say, okay, this has an expiration of December 5th, the 240, 235. When did we put it on? We put it on the 10th. So if we come here and we say, well, we put this on the 10th, so on Monday, we want to show this on our chart. And our strikes were on Amazon 240 and 235. And so our expectation was that this was going to stay above 240. So we can put our short put vertical 240, 235, and December 5th. And I usually have these on ahead of time, but I just wanted to show people how you could do this. And so we were expecting it to stay above this level. And, it came down and today it's rallying, but we have this rallying candle today. This could be a bit of a morning star pattern in the process of starting up. So what do? We wait. But if on Monday this continues to the downside, like it could come all the way down here till 211 and we could take our max loss. And so, if this continues to rally and support and resistance are a range, then, we've position sized appropriately. We can quote unquote afford to take that max loss. We just rather not. And with Tesla, again, here's our short put vertical, here's our date, and this had been kind of consolidating, right? And so we said, well, we think it's going to stay above here. That was our belief. It came down, but rallied today. We have a couple of weeks. A lot can happen in a couple of weeks. And so we're just going to let those percolate. And even though, this is something that I thought that, when I first started, it's like, well, I'm snookered. That's what I thought, because we're through both strikes here. So what's the risk? Well, the risk is we could be assigned at any time on this short strike. And this is saying, hey, we're willing to buy 100 shares of Tesla at $425, and we don't even have $42,000 in the account. And so if that were to happen, and that likelihood increases as we approach expiration, but if that happens, then what we would do is come down here and say, now I've bought a put, so I have the right to sell it at 420. So I take my max loss on that. Okay. Now with this, our goal, spend the nickel to avoid the pickle. Our goal is to get out when we have 80% of our max gain on this. So if we look at Amazon, we weren't willing to spend a nickel. We were willing to spend 5 of them because we would have put our stop in around 26 cents. That's our target. Now we're through both strikes. So you'd think we're at our max loss, but max loss would be $5 and we're at 230. And so we have a long way to go to max loss on this. And the same with Tesla. Even though it says we're down 78%, which looks scary, we paid $1.75. Our target to get out is 7 nickels or 35 cents. We're at 310. We could still lose another $190, but we're going to give it a day or two to rebound. So we'll look at this again on Monday. Okay. Now, Lamb is down. When we come and look at our long call verticals, if they're all, just down either slightly or up close, like here, we're up 18%. We go, okay, we're going to let that percolate, nothing to do. But on Lamb, we're down 48%, and on INTC, we're down 88. And our goal is to get out if we're down 50. And we've been looking at this and talking about it every time we meet. Whoops. Let's look at INTC. So again, this has come down to a support level here. It's been there before, and it looks like it could be rallying, but we only have 5 days left. So if this makes a big move to the upside, and this is a stock that in the last, since it jumped up here in September, it's had a lot of big days. We could, recoup some of that loss. If we exit now, then we secure the loss. But let's look at our numbers on this one. We could get a nickel back times 12 contracts. So I'm going to put this in. We're down 88%. So given we're down 88%, my question to you is, do we, take the nickel and buy ourselves a pickle? Or do we wait till Monday and see if it's rebounded? So this is for INTC. Do we take the nickel? Because that's $35. I mean, it could pay for a lunch. Maybe not at the Montage at Deer Valley, but, at a reasonable place it could. You could buy yourself a paper money lunch. So here's the question. Do you take the nickel? I'm putting a poll in, and I'll do, whatever you suggest on that. And then at Lamb, we're going to look at again on Monday. Okay, so that's it for the dark side today. Okay, and trust me, I wanted to have this conversation with you, not at all. But it's important that we force ourselves to follow our rules and to manage the positions that aren't going well, because human beings being human beings, we hate conflict, most of us. And this is kind of a conflicted situation. We wanted to be making money. We're in a losing position. We just rather not look at it. But, sticking our head in the sand, it's not part of our trading strategies, is it? Right. Yeah, the question is, so do we exit the position and at least get 5 cents a share back, because we could lose more? That's the essence of the question. Okay, so let's go and look at some new opportunities now. And I want to look at both a bullish opportunity and a bearish opportunity. So let's start with Roku. I bought a Roku stick, I must confess. I haven't installed it yet. Maybe that'll go on my weekend list. Probably not, but might. But, we have a stock that it's up year to date 35%. On the last earnings, very bullish day, came up and hit this is probably a 1 year. It's a 1 year high for Roku. And then it's come back down, to a support level and appears to be bouncing. We're still seeing a series of higher lows and higher highs. And if we're saying, there's no sign on the chart that this uptrend is not going to continue. Okay. So, and that doesn't mean that it can't change tomorrow, or Monday. It could. But if we look at this and it's at 101, and if we did a long call vertical, and maybe we do the 100, 105. So again, and with a long call vertical, the goal is for it to go through both strikes and stay there. Okay. So if we look at this on the chart and we say, okay, the goal is for it to go back above this 105 and stay there, does that seem reasonable? Well, just, a couple of weeks ago, October 31st on Halloween, it hit this 1-year high of 116. So that doesn't seem like a major stretch. So if we come to our trade tab and we come out to December 19th, this is the monthlies. And if we look at our trading plan and we go through the list, somebody said, well, you keep talking about these lists you used to create. And I did. Like, I created a list, a checklist for every trading strategy. And I based the checklist on the example trading plan. It was, does this trade 1 million shares a day or more? Check. Do we have at least 20 times the number of contracts? Do we have volume on these contracts that gives us liquidity? Yes. Is the bid-ask spread tight? And we're defining tight or acceptable as a less than 10% spread. Well, this is about 45 cents. So yes. And then the next question is, well, okay, so, and what did I say we were going to do? 100 and 105? Yeah, the 100 is only 30 cents. So we're going to buy a vertical. How much could we lose? $218. So how many of these could we do? We could do 2 because we'd be risking 400. And then we're going to come to our single order, make it a first trigger sequence. We're going to right click and create an opposite order. And we're going to multiply this by 1.5, which would give us what? 346 or something like that. So 228, let me get out my calculator, times 1.5, 342. So our target, we're going to, and so aren't we leaving a lot of money on the table? Yeah, $160 a contract. Well, or 158, because the most we can make is the $5 minus what we're paying to get in. So if we went for our max gain, we could make $272 a contract. What we're saying is, hey, if we can make 100, we're going to be happy. That's a 50% gain. So we're going to be, we don't want to be as, the expression when I was a kid was, don't be a greedy guts. So we aren't going to be greedy. And, if you meet with someone for Thanksgiving, you say, somebody's suggesting I do this trading strategy. I'm in it for a max of 35 days. And to go with a paltry 50% return, they're going to think you've had too much to drink. Because that is a pretty decent return. Now, on the other hand, we could lose 100%. We could lose this 466. And we've seen in the one example that you're all voting on is, if we don't manage it. And so you might say, well, why don't you put in an OCO order? And it's because when the markets first open, as we saw this morning, they can be pretty volatile and lots of stocks can drop. And then you're out for a 50 or sometimes 70 or 80% loss. And then the market settles down and you wouldn't have been out at all. And so because of that, we've decided that in our execution of this plan is we're going to look at them daily, just have a quick look daily, but we're going to just put in the target. Because if the market goes wild first thing in the morning and gets up, hits our target and gets us out for a 50% gain, we're going to be happy with that. We just don't want to get nicked out on the downside like we did on CLAC today. Okay, so that's Roku. And thank you for the guidance on how easy it is to install. Not a recommendation to go out and buy a Roku stick. Yeah. Okay. The other one I want to look at, and we haven't traded Micron a lot. Like, this stock has been on such a tear. It's in the tech sector, up almost 200% year to date. Like, look at this trajectory since September. It's gone from 118 to 254. Like, it's up over 100% since September. And we have this bullish engulfing candle today. So we might just say, like, Barb, like, you've missed it. You've missed it. But is there any sign that this has continued to change? Like, it's been using the 10-day moving average. It's still using the 10-day moving average and this could change when at any time, but it's still using this 10-day moving average. It would appear as support. We have a bullish engulfing candle at a support level. This sucker is up 7.3% today. But could we look at this and maybe do this conservatively? And we have a couple of ways we could do it. So we could say, well, what if we did this? Oh, here we have to do 250, 260. Now, this is pretty heavily traded, so we could come out to December 12th. We've got lots of volume, a decent bid-ask spread, and we could do a $5 wide. So we could do the 250 and the 255. And it's already at 254, so this thing only has to go up another $1 to be through both our strikes, which is the goal, right? So if we look at this, this is 250. And, we could still make how much? We could still make 100% return. And it only has to go up by $1. And so you might say, well, that looks pretty good to me. And how many of those could we do? Well, we could do 2. Because then we'd be risking 500, which is the goal, right? We don't want to risk more than that. So if we say, okay, we're going to do 2 of these, single order, first trigger sequence, right click, opposite order, 50% gain, 375. So how much of the potential profit that we could make are we leaving on the table? Half. How do we feel about that? Totally cool with it. Again, if you're not totally cool with it, then you can put in a different target. But what I found in the School of Hard Knocks was that when I was being greedy and I wanted that 100% return, I almost never got it. You have to stay right until the final hour. Meanwhile, if I'd been more conservative and not so greedy, or like, how can I say that? I just think it just kind of drives the concept home. But if I'd had a more modest target, like often when a stock really moves, we could be out of that trade in 4 or 5 days. And instead of waiting 3 or 4 weeks, for it to get to that 100% return, maybe I could have done 3 different trades and made 50% on each one. So ultimately making more by being satisfied with less. Capiche? When my son was really young, he'd be 2 or 3 and I'd say, capiche? And he'd say, I don't like capiche, Mom. It's like, well, there we go. So long call vertical. We're putting it in that bucket. Now, if we want to compare it, just in case, we'll go look at the December 19th, $10 wide. So if we wanted to compare that, I put it in save. I didn't want to save it. I wanted to send it. So let's come over here and confirm and send. Okay, long call vertical. Sometimes you just can't talk and do things at the same time. Okay, so now if we look at December 19th, what made me back the truck up? Well, the fact that these are $10 wide. And so unless you're right around that $5 mark, this is 240, 250 or 250, 260. So this means it has to go up further. Now there's a 91% probability that it's going to come up and at least touch the 260. Statistically speaking, there's a 42% chance of it being in the money at expiration at the 260. So as opposed to what we did with the 255, we have a 98% probability of it kissing it and a 46% chance of it being in the money. Oh, right. Earnings is coming up as well, but earnings will increase the volatility. So this is one that we want to be out of prior to earnings. So if we look at the 250 and the 260, we're risking 453. What's the most we can make? Well, 545. $10 minus the 455. But, again, where would we put our target? Well, we'd put our target at, that 50% higher. Okay. And when is earnings around the 5th? Earnings is the 17th. So earnings is 2 days before here. So this is something we could just be aware of and say, we're going to make sure that we exit prior to that. But let's put in one to just compare them, times 1.5. So our target on this is going to be $7.05. First triggers sequence, right click, create opposite order, and then 705. And we're going to make that good till canceled. Long call vertical. And we're going to compare that. Oh, $5 wide strike. Okay, so on our survey, 50% are saying take the money. Almost 60% are saying take the money. So I'm going to show you how to exit that, but I wanted to do a bearish trade also. And we're going to look at Adobe. Because Adobe, unlike Micron, they're both in the tech sector. And if you're not familiar with the company, you can come to the Analyze tab and see. And analysts seem to, be on the love train for this. And when we have a quick look at the fundamentals, not that it means the fundamentals will be strong going forward, but the trajectory has been up and to the right for the last couple of years, except for, what's this, our book value. So, but when we look at the chart, I mean, this stock is down 25% year to date, has, not made an appearance above the 100-day moving average very frequently, and not at all since the middle of June. And then if we come down here, and we do have earnings coming up on December 10th, but and this is an expensive stock, so we could buy a put and do a swing trade, down to this 323 level. But we could also do a long put vertical and just say, like, hey, this is at 332. I could see this coming down to 330. Like here it was at 323. So if I look at 330, where's that on my chart? Is that a big stretch to say, I think this could come down to 330 if we did a long put vertical at 325 and 330? So if we look at that and we say, I could see that happening. We've had a lot of bull flag kind of action here, coming up, coming down again. So 335, if we come out, and when did I say earnings was? The 10th. So let's see if we've got enough volume to come out just 21 days. So we've got hundreds of contracts here, about $1. That's a little bit wide. And so we might not want to do that at 335, because this is $1, but $1 is still less than 10%, or it's around 10%. So let's see what this would look like. So if this is 250, then how much can we risk? 500, our single order. So we've just kind of taken this and done a flip it and reverse it, create an opposite order. When it's worth 375, we'd like to take the money and run. And so with this one, the expectation is that Adobe might continue to fall. But just in case there's a good earnings report, we want to be sure that we are out prior to that earnings announcement. Okay, So I said I wanted to show you very quickly. Oops, under the monitor tab. So what have we done? We've done a long call vertical on Roku, which is bullish. We've done two that we're going to compare on Micron. One with the monthlies at December 19th, which is a $10 widespread, and then one that expires December 12th with a $5 widespread. And then we did a bearish trade, a long put vertical on Adobe. Now on it's INTC. So INTC, we had an exit. And so I'm going to sort these by symbol so that I can come down and find this quickly. We wanted to get out, you know, was it INTC? Yeah, we wanted to get out when this was worth about, 62, and we're now looking at getting out for closer to a nickel. So we're going to cancel and replace that. We've got 12 contracts here, so it's about $50. And that was our long call vertical that did not go according to plan. So I will make sure that that fills. I wanted to show hit that button in the bottom right corner of your screen because it's free to subscribe. And this is how I access things when when you first get here, whatever is currently being taught will be what is showing first. And then if you come to playlists and come down for you checklist people or trading plan people, if you're new here, so this is, I've grouped it into 4 categories. So the top one that you're seeing is these short videos on different candle patterns. Then there's a couple, if you haven't checked these out, I encourage you to watch them and please share them. But then here's an example trading plan for a long call vertical. And then here is one for a long put vertical, the 2 types of trades we placed today. And then here's the short put vertical and the long call vertical we bought back. And it talks about, when to buy, what to buy, how much to buy, etc. And then what your routines are to manage these. Okay. So that's it for today. Appreciate you being here. Again, please follow Ben and I in the land of X. My handle, Barb Armstrong CS, Ben Watson CS. Again, if you haven't checked out his trading index options, you'll want to check that out on Wednesday afternoons. Hit the like button. It helps move things up in the trading algorithms on YouTube so that more people can find this content. So as I like to say, you could be doing a favor for some random stranger whom you might not meet unless you go to a live event, and then you won't know that necessarily you were the person that turned them on, but a good deed nevertheless. And have a really awesome weekend. Get out and hug someone you love. Lots of great content still to come. So stay tuned. Bye for now.